Good morning, everyone, or afternoon, sorry. Welcome to another edition of our client calls with some of the Raintree products. And today we are on one of my personal favorites for a lot of reasons. Some of them sentimental and some of them just risk return based. But we're really excited to talk about Avenue Living Ag today. This is an investment where you get to invest in farmland, largely located in Saskatchewan. For those of you who know me, you'd know that I am a very proud Saskatchewan raised person. And if you ever ask me, I'll tell you all the best things come from Saskatchewan, and I stand by that statement. So really excited to get going today. Today we have Leif Snethin on the line today. Leif is the CEO of Avenue Living Ag Land Trust, and I think you're going to find him to be very knowledgeable. But I also think you're going to find that Saskatchewan farmland maybe has some properties that maybe you didn't necessarily recognize. Like I say, it's a product that's been near and dear to my heart for many years. This type of asset class. So I'm really excited that you decided to invest a little bit of your time today to learn about this opportunity. So Leif, I'm going to turn it over to you. I'm going to turn my camera off, and maybe you can do the same just to protect the bandwidth, and then we'll bring these cameras back on for the Q&A section. Regarding Q&A, I'll just ask everybody on the line. You'll see at the bottom of the screen that there's a chat box, but also a Q&A box. And what I would ask is that you use the Q&A box instead of the chat box, because it makes it a lot easier for me to keep the questions organized. And if it's something that I feel I need to interrupt Leif on right on the spot, then I will, and we'll address it right away. Or I can choose to kind of park that question until the end where we'll save it for Q&A. So with that said, Leif, over to you, man. Excited.
Please do feel free to interrupt. I actually like that.
Okay, will do.
All right. Good afternoon, everybody. And to reiterate what Adam said, thank you for taking some time out to listen to our story. I'm going to turn the camera off and we'll go to the presentation now. So the Avenue Living Agricultural Land Trust. This was something that was we've been around since 2016. So not a whole lot of history, but we've done a lot since we started.
Yeah, just to clarify on that, this is Raintree's second investment in Saskatchewan farmland. So when I said it's an asset class that I believe in, something that we've been talking about here at Raintree since I believe the fall of 2010, maybe early 2011. But this version of that concept is only a couple of years old in terms of the relationship with Raintree.
Sorry, we're having a little bit of trouble moving the slides forward, but here's your the standard disclaimers. I'll let everybody read those at their leisure. Avenue Living has been around for 14 years, and that is the parent entity that I'm living under the umbrella of. So the ag product is a totally separate vehicle than what has been around for 14 years. But what I get a lot of benefit out of being associated with the core business of Avenue Living, and that is pretty much there's two main factors. One is I get access to the support that Avenue Living has created for itself, being legal, accounting, and the second biggest part is it is known in the financial services sector, so it's helped to open doors in the lending community and such. Just real quickly, there's 5 products that Avenue Living provides. The core trust, again, being the one established in 2006. Then there's the Opportunity and Ag Trust that were started at the same time as my vehicle, and then Mini Mall and the U.S. real estate just started here last year. So currently we are raising $35 million as the target. We've actually chewed into that a little bit in 2020 already. I think we've got about 32 million of room left. Currently, the Ag Trust has 57 million of assets under management. That is, we've gone to a quarterly NAV evaluation, and so we're going to be coming out in the next month in August with a change in our NAV, change in some of these numbers on the screen right now, to the positive, and obviously I can't say to what extent, but everything is moving in the right direction. We have just over 37,000 acres under management, lots and lots of deals in the pipeline. The investment strategy. When we first, I should back up and tell everybody a little bit about my background. I was born and raised in Calgary. Dad was a petroleum reservoir engineer, but every Friday night we headed out of Calgary for an hour drive down to the family farm where we did a week's worth of farming in a couple of days. So that was my entire youth, is half in the city and half in the country. I became a petroleum geologist and worked in the small cap oil and gas space for over 30 years, but continued to help out with initially with the family farm and then with my own ranch that my wife and I purchased near the family farm about 15 years ago. So still heavily involved in ag, and that led me to have I believe the skill set to properly manage investor funds in this ag space. In 2016, geology no longer was providing a living for me in the oil and gas side, and I had gotten to know the founders of Avenue Living as our kids were going to the same schools here in Calgary. The idea of putting me to work in running an ag trust came up, and upon researching the space, it was quickly determined that we could make a business out of buying land in Saskatchewan. It would be very difficult to do it outside of Saskatchewan in Alberta or Manitoba. The big reason there is disparity between land cost. What has happened over the years is due to restrictions on ownership in Saskatchewan, that being managed by an entity called the Saskatchewan Farmland Security Board. That has been the major reason in keeping prices lower than the surrounding provinces. And I've got a slide coming up that'll show you exactly what those differences are. The main component of why people should invest in our ag trust is capital appreciation. That's the dominant driver for the investment strategy. Over and above that, though, I am or have been transacting net of tax at a 4% rate of return. What that ends up doing is, with our strategy, we are using leverage, and that is our strategy of the trust buying farmland. It's not a new concept, but what is different from most of our past competitors and current competitors is that we are using leverage. This increases investor dollar exposure to acres, and as such, certainly in our first 3 years of history, has increased the return potential in the trust. We aren't just passive owners of farmland. We do things to improve the land, to improve farming efficiencies on the land, and all those things drive our ability to increase rents over time. Asset improvements include, small drainage projects to make sure that sloughs don't end up being obstacles to farming efficiencies. There's been some serendipitous. Serendipity always enters the picture when you own things, and with this farmland we're now being paid for a wind project application to have our land as part of that application. We're being paid for gravel that ended up we ended up having a gravel deposit on one of the pieces of land we bought, so one of the RMs is paying us for gravel. And of course, we've got some oil and gas revenue from surface leases on our lands. Just for clarification, we don't own subsurface rights, but we do get paid for surface access onto some of our lands. Okay, I talked about the disparity in land price. This slide shows highlighted in color is Alberta in red, Saskatchewan and Manitoba. You can see Alberta is average farmland price is around $4,000, Saskatchewan around $2,000, and Manitoba at $3,500. And again, this difference is, I believe, primarily due to restrictions in ownership by the government, and maybe in a minor way, there's in Alberta we have a tremendous population, tremendous number of Hutterite colonies. These groups, I mean, ultimately, I think 100 years from now, maybe all farming will be done by Hutterites, but they have a different economic, business economics, and they tend to have a very long-term view. They tend to set land prices where they are present, and they have certainly done so in Alberta. And now when Hutterite colonies get to a certain size, they make a new colony, and most of the new colonies these days are in Saskatchewan due to the difference in land prices, but they are also starting to drive land prices in Saskatchewan. Yeah, and you can see that it's the cheapest farmland in Canada. One thing that's not part of our business plan, but we view as blue sky, potential blue sky in our scenario, maybe not in the life of this trust, but within the next decade, perhaps, the political sentiment is changing. Farmland security their rules were created to protect, at least attempt to protect, I don't think they really have, but attempt to protect farmland prices from going up to help younger farmers enter the space, or to help the offspring of farmers to grow their own business. The trend is that the kids aren't going into farming these days. They tend to want to make their money by pushing the keys on the keyboard rather than getting dirt under their fingernails. So that is more the trend, and that is where most of our farmland is being purchased from, is from guys retiring that don't have any family members to pass it on to. And as such, the political winds are changing as far as, instead of protecting prices for, keeping prices low, it's more like, if I'm retiring, I want the same price as my Alberta buddy. And I think the pressure is to remove these restrictions, but again, not part of our business plan.
Leif, maybe we could, because if I was learning about this for the first time, one of the things that I'd probably be wondering about right now is, well, if there were rules in place before that were restrictive, how have those rules changed, and why can the land appreciate now if it couldn't before? So could we go over just a little bit of the history on that rule? Leif, why don't you talk a little bit about the current environment? You touched on it a little bit, but talk about why you are confident in Saskatchewan land prices and their ability to rise on their own, but also to catch up to the neighboring provinces.
Right. And I'm sorry if I missed it there, but so it was opened up in 2003, at which point things went on, prices were changing, but then I believe it was 2012, Canada Pension Plan came in and bought 115,000 acres of land in 2012.
Yep.
And that freaked out a lot of people, again, in the farming community, and that's when farmland security slapped on, brought back some restrictions.
Right. So it's not as restrictive as it was for that 15-year period, but it's not a wide open market either. Would that be a fair assessment? Yeah.
Correct. And in fact, just so everyone's clear, we had to, when we decided, okay, it looks like we can make a business out of land in Saskatchewan, we had to go to Saskatchewan Farmland Security and apply for exemptions to their rules to operate as a trust.
Right.
So, I mean, one of their biggest things is they will not allow a pension plan to own land or to buy any more land in Saskatchewan. So we managed to get that exemption, but it did come with some restrictions. One is we could, all our investors have to be Canadian. We can never have more than 1,000 unit holders, and we can only raise a maximum of $50 million of equity. So those are the three dominant restrictions, but at least we got it and we're able to move forward. And yeah, I think what has happened now is land continues to go up in all provinces, in all areas. But Saskatchewan, I think I've got a graph coming up here, has been going up at a slightly higher rate than the rest of the provinces because of the whole catch-up scenario. Land itself, I had an interesting call yesterday where people were under the misconception that, well, Alberta land is more valuable because it's better quality soil, the yields are better, and basically inferred that the sun shines brighter in Alberta, all of which is bullshit. The land is the same. I mean, there's variability in all the provinces where, geographically where you go, there might be better land here or poorer land, but there's no difference in sort of average yields in Saskatchewan versus Alberta. We'll just, I guess, pause for a minute and look at the general characteristics of the trust. We are a open-ended mutual fund trust. This offering was a maximum of 35 million, and that is because of the 50 million we had already raised, 10 of which was friends and family when we first got rolling in 2017. Maturity date is December 31st, 2023. It is our intent not to obviously to give everybody liquidity that wants liquidity in 2023. Our intent, though, is to not sell the land. We're going to do everything in our power not to actually sell the land. We are going to roll this into a yield-bearing vehicle past that in order to provide liquidity for those that want it. We will be refinancing the land. We will be using new investment dollars in the next vehicle to provide cash for those wanting liquidity. Or in the worst case scenario, we will have to sell land, of course, to give the liquidity. But it takes a long time to put these land packages together. We view this asset as something that's going to be of value. It's of generational value. It should increase in value over time as the global population increases and the need to feed them increases. So we just feel that most of our friends and family anyway think that we will want to roll this investment into our kids, to will it to our children, basically. Current fund AUM as of year-end, sorry, not year-end, but Q1 was 57 million. We will be coming out again with new numbers on that. That number will be larger here next month when we announce it, as will the current NAV. Let's see, again, I mentioned that 10 million of the initial investment was from friends and family that got us rolling. Target return is 12%. And some people will go, well, how do you get to 12% when you see, a graph coming up here that'll show, last year Saskatchewan returns on land was about 8%. Again, remember that we are using leverage, so we expose our investors to a lot more land than on a one-for-one basis with their investment dollar. So that's how we boost the returns above what the actual land return is. The waterfall. So investors, at the end of the day, in 2023, investors get 8% preferred return per year. And should there be any remaining profits after the return of capital, the 8% rate of return per year, if there's anything left, that is split between the investor and the GP. Yeah, that's about it for that one. Okay, this is a
Rafe, with that preferred return that you talked about there, that 8% hurdle, there may be some confusion on what that means. So there's no income being paid to investors on this offering. It's all going to be like a lump sum at the end. And then the way that's calculated is the first 8% of annualized return goes to investors, and then a 50-50 split of everything over and above that. Correct?
That is correct. And
Okay.
and we'd love to be paying a distribution that would attract way more investors, because that's just the way people these days, they love to see money coming back to them. But the rent income we get is used to pay our debt service.
Right.
So it's a bit of a trade-off. We can't pay a return, but as a result of not paying the return, we're exposing the investor to a lot more acres.
Exactly. Yeah. Thank you.
Okay. So we've been raising Class C units in the EMD space. I guess it's getting to be about a year now. And as of at the first year we started doing that was in 2019. And as a result of the cost of initiating that share class and everything, you don't see the 12% rate of return. So after basically 7 months, I guess, of activity in the C class space, that's your return as of year end 2019. We will be coming out with again a different number for that next month with our updates. This is showing the last 3 years of land value appreciation throughout Canada. And that's the numbers, the actual numbers on the left-hand side of the screen. On the right-hand side of the screen compares the Class A returns, because I didn't use Class C because we didn't have much history there, but the Class A returns in the trust are in yellow. And again, that first year you see startup costs affecting that, just like you see it in the first year of the C class. Then in red is Saskatchewan farmland appreciation, and in gray is average Canadian farmland. So you can see the trust is outperforming even the Saskatchewan farmland appreciation. Again, that is due to the leverage factor. Impacts of COVID-19 this year. A lot of people are concerned about all their investments in general. I am very comfortable being in farmland, in our investment in farmland, for several reasons. One, it's been really good to have the public be educated or re-educated as to the importance of farmland and why the government, most Western world governments are very protective of their own farmland space, and that is just to protect the food supply chain. It's very important to keeping a population calm in times of crisis. If you keep them fed, that will definitely help keep the population calm. If people start getting hungry, I would imagine we would see a lot more chaos in our society. The weaker Canadian dollar is actually a net positive for Canadian farmers, as commodities are traded in US dollars. COVID times have seen, not just because of the virus, but because of Soviet and Saudi competition on oil prices. We've seen oil prices low. We've seen fuel prices quite low for diesel, and also fertilizer prices, because fertilizer comes from natural gas. Input costs in general have been quite a bit lower this year than in the past few years, so that obviously helps the bottom line. What I can comment on now, in the last 6 weeks, 2 months to 6 weeks, commodity prices in general, grain commodity prices in general have really started to strengthen, and they're definitely back to last year levels, with the exception of lentils, which this year is going to be a real boost to the Saskatchewan farm community, because lentils have gone from 15 cents a pound last year to upwards of 30 cents a pound. So it's going to be a big windfall for everybody that grew lentils, and there was a lot grown, because it was speculated by the community that this was going to happen. And that was that India is having some problems with their crop, and they have removed import duties on lentils that they had put on a couple of years ago. So everything is very positive in the farmland space.
And I can tell you, Leif, I'm actually doing this call from Saskatchewan. I've been spending a little bit of time here in the summer, just with the whole COVID situation. It's been easy to do that. And just talking to my ag clients here, they're all pretty happy with things. There was they needed some rain, I think, was it the southeast that was looking for some rain, but all around here, they're bumper crops. You can see the crops are looking really good.
And as they are here in Alberta too. If you haven't been hailed out and have too much moisture because of the odd localized storm going through, your crops are looking really good.
Absolutely, yeah.
I will mention that people have been hearing about the livestock, the cattle space, the livestock space. I mean, it is recovering now as well. It went through a bad time because of some meat packing plants that ended up getting COVID and set them back, and that set the industry back quite a bit. That is coming back. I think we'll be fine. But of note, the trust does not own any pasture lands. I do not expect pasture land to increase in value the same way as farmland, and I also can't get the same 4% return on pasture land that I can get on farmland. So the trust does not own any pasture land. So that side of the ag business doesn't really affect us. As population grows, population density grows, it chews into our arable land. The slide on the left shows the average hectares of farmland per person, and obviously going down as the population grows. And then on the right, the caloric intake of individuals globally as countries get wealthier and more people come into the middle class and they're able to afford better food. That caloric intake goes up, and again, that drives commodity prices, which then helps drive land prices. Consolidation of farmland, maybe not exactly the right title here, but what this is showing is that farming, like any other business, benefits from economies of scale. And that's just the way of the world, and that's been a trend for decades. Industries consolidate, and that is definitely what's happening in the farmland space, somewhat accelerated by the fact that our youth are tending away from manual type occupations. So what you're seeing is farmland or farm sizes getting larger and larger, and hence the number of individual farmers decreasing. Risks, again, you can read these at your leisure, but it's the obvious. There's no guarantees on returns. When you invest in this offering, you should be thinking that your money is with us till 2023. Redemption options, again, are fairly standard, the same as the other Avenue Living offerings. Again, you can review those at your leisure. And really, we could stop there for questions, or we could go into a case study or something like that as far as the purchasing of farmland.
I've got one question I'd like to ask now, Leif, and then
Yeah.
we'll maybe save some others for the end. And for those on the line, if you do have questions, by all means, start putting them in the question queue so we've got some for the end. But you know, you kind of touched on it, Leif, but what sort of operational risk is the investor taking, right? Like let's say 25% of the portfolio gets wiped out with a hailstorm this year, and the crops are lost for 25% of the portfolio. What's that going to do to this investment?
That is likely not going to do anything to your investment. I'm really glad you brought this up. We should have a slide related to it. When I first started trying to raise capital for the fund, I was looking at some of the U.S. There's quite a few U.S. ag funds, and I was looking at their model, and they like to increase their returns by using a component of cash rents and a component of crop share. The crop share being the one that has the potential to really increase the returns of a vehicle like this. When I started talking crop share to potential investors, just because of the lack of comfort and lack of knowledge in the space, people's eyes would glaze over, and their perception of risk just would tend to make them not even bother listening to me anymore. So we stuck with it's purely a cash rent model. And so what tenants do, in our case, most of them pay in the March 1 is first payment, and second payment is November 1. So we get our rents in March 1 and half of the rent, and they go out and they raise their crops, they plant their crops, and say in your case, they get hailed out. Well, our second payment, our November payment, is covered off by the fact that while they would do it in a normal case of business anyway, but we actually require in our lease agreements that they carry crop insurance. And again, they would carry it anyway. 95% of farmers would carry it anyway. So what that means is they're covered off for an average rate of return, even if their crop is wiped out. So they can pay us, they can buy seed and everything for next year and get going again next year. This is all part of a government-backed, basically protecting our farming, our food chain is what it is, effectively. So there is very, very little risk of us not getting our rent. So in the 3 years we've been active, we have collected 100% of our rents and never had a vacancy on any of our land. So that gives you a sense of the security of this investment.
Yeah, well, and especially for anybody who's invested or is a landlord themselves in anything that's to do with rent collection these days. Thankfully, most of the products on Raintree Shelf have done a really good job, in the real estate side, collecting their rent. But I don't think we have anybody with 100% other than this one. That's a pretty impressive number. On that point, Leif, there's a couple of questions around debt and debt coverage ratios. So first of all, what is your leverage cap? What's the most you can lever this thing up to?
We can take it up to 75%.
Okay, and you're currently at
65%.
Okay, and of that rent collection, how much of that money you collect for rent goes to debt coverage?
Almost all.
Okay.
And I will say that the lending institutions treat us a little bit different than they do individual farmers. For those of you who are involved in farming, you can get, and as an operator, you can get probably up to 75% debt to value when you apply when you go to buy a piece of land and apply for a mortgage. Because we are a non-operator, they tend to view us in a different way. I personally think the risk is way lower for us. but politically, they just treat us differently. And what they give us, and our lenders being ATB, Royal Bank, and Service Credit Union are the three big ones, 55% debt to value. So what we have done with one of the criticisms of our past competitors is in this space is they go out and they raise money and then they start buying land. And of course, you can't just go out and buy land tomorrow. It takes a while, and especially if you're being prudent about your acquisition costs, it can take quite a while to deploy that capital. What we did is we got started with that 10 million of friends and family, and then we thought, well, you know what, it'll be easier to raise money if we have a use of proceeds in place. So when good deals came up, we did step into the mezzanine financing space, paying a little bit more interest rate with the idea that we would raise equity to pay off that mezz and keep going. Well, as it turns out, we just keep raising money, but opportunities keep coming up, and that's why we're at 65% debt to value rather than 55. So we are using mezz debt to basically provide you guys with a immediate use of proceeds, so your money is never sitting idle. If that makes sense.
Yeah, that's great, Leif. Thank you.
All right. Back to the rental collection. I will add, just for full disclosure, that this past year on the first half rent, there was 3 out of 27 tenants that were not able to pay on time. And they were very forthcoming, very open early before it was due. It wasn't COVID that was the problem. They had cash flow problems, and it was because well, it seemed that, our government allowed a few individuals to burn wooden pallets on our train tracks and stop grain from heading to Vancouver, and really screwed up the cash flow situation for a few of these guys. But they were, we just worked with them. All rent was paid 6 weeks. I think it was no more than 6 weeks after it was due. So it's not as if we don't have slight glitches, but it's never that the money's never coming in.
Right.
Sorry, I got political there.
No, that's great, Leif. I love it. I love the candor. Why don't you go through this case study, and then there's a couple of other questions here that I think are going to really spur on some interesting conversations. And again, keep the questions coming, folks. These are awesome. Thank you.
Okay. The case on the screen right now is a property we bought in 2017 at Balcarres, Saskatchewan, and it was it ranks as one of the bigger purchases we made at 4,300 acres. We came in and negotiated with the family here on this piece, and it actually came with quite a bit of acres that we could reclaim. Not a lot had been spent. I think the father had passed away a few years before we were active. We were dealing with the kids, and there was a lot of money had not been spent on this. And when we bought it, we were able to. We've already reclaimed, I think, about 180 acres just by pushing bush that had been allowed to grow on pasture, on land that was used for pasture, but was great land to turn back into to farmland. And that's what our tenant has worked with us to do. Our tenant didn't do the land pushing. We had to hire outside dozer contractors to do that. But now our tenant has got that actually producing crops and is quite happy. And our lease rates have gone up as a result of these efficiency improvements. But to step right back to how we purchase land, this came to us through an MLS listing. And just so you know, our guesstimate is around half of land trades in Saskatchewan farmer to farmer. So you never hear about it before a deal is done. But the other half is MLS listed. And we looked at this. We made an initial offer based on comparable sales. We got turned down on our offer. We saw that it was still available A month later, made another offer, and we engaged and finally came up with a price. Our accepted offer had 45 days, for which we had the time then to go look for a tenant and to do obviously the visual inspection and everything. But the primary thing was finding a tenant, a multi-year tenant, which we were able to do. Had I not been able to find a tenant, we would have just walked away from that deal. And when you walk away from a deal at that first stage, there is no cost to the trust. You get your small deposit back, and you move on. When I did waive conditions, of course, then there's a secondary deposit, and then you're locked in. Then if you walk, then you lose that much larger deposit. But one interesting thing about farmland is I can't remember the exact details, and I don't have it here as far as the closing, but I believe we put that under contract in looks like May of 2017. I think we closed that in November. So we lock in the price, got 6 months worth of value appreciation, and then have to come up with the cash. So it's really interesting because of the whole seasonality of the farming, of the farming being in the summer, how you can lock in prices and then not close on a deal until many months later. So that's worked out in our favor as well. That's just a little example of how a purchase would work.
That's great, Leif. Thank you.
And that's really it. The rest of the presentation is just really more examples of very similar type scenarios.
Okay.
So if we want to go to the questions, that'd be great.
Yeah. So the first one is a very easy one. How do I get a copy of the presentation or fact sheet? So what I would say to that is reach out to whoever invited you to the call, and they will send you that. No problem. We've got approved marketing material on this. It's all there. This next question, I'm really glad it was asked. It's by a friend of mine, and I'm really grateful that he asked it. If all the young people are moving away from farming to a digital world, who is left to work the farms? Is there an issue around available managers, farmers, and workers now and in the future?
Yeah, there really isn't. I mean, not all young people are moving away. I don't know, Adam, if you know any, but I've now met, I would say, well, at least 4 guys in their early 40s that are managing. Well, all 4 of the guys I'm thinking about are managing over 10,000 acres farming, and there's one that's managing over 20,000 acres.
Yeah.
And these are guys with ag backgrounds, ag experience. They know what they're doing, but they are running it like a business. They are hiring staff. They're running multiple lines of equipment. They are really impressive guys.
It's big business, isn't it? And I think that's the real answer to this question is what we're seeing more so now than maybe even before. What we're seeing now is frankly just more consolidation, and like that hobby farm that used to exist 30 or 40 years ago, there's still a few, but they're few and far between, right? Like, it's just you said it, I think it was one of the first things you said today, Leif, is that farming is now more than ever a game of big scale. Like, you want to get big, right? The equipment, the combines and things like that, like they're big ticket items. They're huge. And it's hard to do if you own, a couple of quarters of land. It's pretty hard to make this work in that capacity. So what we're seeing now is the little farms, that little romantic hobby farm that maybe we knew of in the past, those are sort of going away. And as people that own those are getting to the stage where maybe it makes less sense for them to be out on the farm, maybe they're selling those and moving into town. And but we're also seeing just even mid-sized farms sell to those larger operations, and it's happening more and more and more.
That's right. Yeah. And these guys that those 4 guys that I'm talking about, they actually are talking to me about being a partner, because at a certain point, they, again, like you said, each individual, like a line of equipment, a drill, a seeder, an air drill, a tractor, a sprayer, a
Yep,
combine. All those items can be over $500,000 each.
totally.
So a line of equipment is like $3 million to run. Call it 4,000 to 5,000 acres is what you need a line of equipment for.
Yep.
It's a big deal. So guys that have gotten to the point where they've got enough leverage, they want to grow their operation still. They would rather rent than exceed a certain amount of debt on their side.
Absolutely. Well, and frankly, like that's one of the things that as an advisor, I find so appealing about this investment idea, right? Like I don't like just go to your computer and Google why should I own farmland from an investment standpoint. You can find countless articles. They're all over the place. Yeah. But the problem with it is like you can't just go out and buy 15 acres of land, right? Or even even 80 acres of land. It just, from a scalability standpoint, it just doesn't really work. No. And this essentially gives an investor the ability to leverage the scale that you get in this offering to invest in an asset class that they want to efficiently. It's quite unique in that way.
And then I do want to mention the other group, of course, that's a ever growing group is the Hutterite group.
Of course, yeah, so, yeah. That is their mandate is to grow and grow and grow and grow and grow. And you said it right at the top of the hour. The mandate there is to expand their colonies and do all that. So the more land they can get, the bigger they can be.
The neat thing about what we're doing is my sweet spot on the acquisition side seems to be in the $1 million to $3 million range.
Yep.
And those packages are too small to interest the Hutterite groups.
Yep.
But once I put together a couple of those in one area, as far as value goes, all of a sudden my package becomes interesting to a Hutterite group.
Absolutely. Yeah. So, or an institutional group, or like you're at that stage now where you can attract some pretty big fish for sure.
So I'm actually doing a bit of consolidation myself on that side. Right?
Yeah, good for you. That's great. Great question. What is the minimum investment size, and can we invest through our RRSP or TFSA?
Yes to the RSP and TFSA side. That's we're set up for that for sure. Minimum investment size we've stated is 25,000, and that number is the size of that number is partly due to not being allowed to have more than 1,000 unit holders at the end of the day.
Right.
I think we have a little bit more room. We were making some exceptions for smaller investment, and I think we've got a little bit more room there. But that's the driver for wanting the bigger investment is staying away from the 1,000 unit holder cap.
Right. Leif, how does the price change on this investment, right? Like as someone who's investing today, are they buying in at the same price as someone who invested in at the time the fund originated? And are there future share price increases that we can expect down the road?
Yeah, this will be the first one we've done, but as of the latest OM, we described how we're going to a quarterly NAV adjustment. So the answer is no, you're not buying in at the same level as someone did. Like last year, people were buying in at $10. Right now, you would be buying in at $10.47, I believe. That will change next month. I think the middle of next month after our closing, it'll change to a different number. I can't say what it is.
Yep.
But yeah, that's what's happening now. You're buying in at NAV. At right. The current stated NAV, I guess is the proper way to say it.
Right. And so if someone wants to get in at the price now, the next closing is the 13th of August, correct. Which would mean, just to get your ducks in a row and the deal in, you'd probably want to let your advisor know, sometime in the first couple of days in August so they can get everything ready to get you in. And again, the world's going to keep turning. If you miss that first close, if you want to get on the next one, that's fine. But the follow-up question to that is, this investment is quite unique in that you have a defined maturity date, which I think we all really like. And so someone investing now, I mean, they're only in for, what is that, 3.5 years if we're at the end of 2023. At what point do you stop accepting new subscriptions? Is it going to be based on dollars? Is it going to be based on timing? What's going to trigger the end of this raise?
Well, there is a cap on the dollars, as I mentioned before. If we reach the I think we're at 18, maybe 18.5 million of equity raised so far. If we hit 50, that's the hard cap at this point. We don't like to push the value because it's undeterminate, but we do have some pretty good relationships with the Saskatchewan government. They like what we've been doing.
Yep.
Part of which is not pushing farmland prices higher like a lot of our competitors have in the past.
Yep.
And yeah, I should have mentioned that in our buy strategy. Our perfect scenario that's happened several times now is where we've made our offer, hasn't been accepted. Weeks later, people have come back and say, you know what, there's a neighbor that wants to buy a piece of that. Would you buy the rest of it and rent it to him? That's our perfect scenario. That's the happy tenant scenario. We haven't stolen it out from a neighbor's nose kind of thing. And that reputation has gotten around. So we've got good government relations. Things could change to the positive should we ask, but right now, no intention of asking.
Yeah, and I can vouch for that. I mean, this isn't something you're going to read in any farming textbooks or anything like that. But as someone from Saskatchewan, I can tell you that nice guy factor matters, right? Like, people in Saskatchewan, they want to work with people that they like, and the last thing someone from Saskatchewan wants is a suit from Ontario or BC or Calgary or something coming in and telling them that they know more about what's going on here than they do. There needs to be some humility and respect that goes along with this process. And part of why I wanted Leif's camera on today wasn't just to see that pretty face of his, but just to see that like he's just a normal guy, right? You're not coming in and intimidating farmers. You're not showing up in a 3-piece suit. You've got dirt on your fingernails just like they do, and you respect the heck out of what they do for a living. And that stuff, that may get lost on some people, but just believe me when I say it, as someone who grew up in Saskatchewan, that is critical to the success of an operation like this. And I know there's a few people on the line from Saskatchewan, and I can see through my screen without looking at their camera that they're nodding right now, because what I said there is bang on.
It's hard to explain to non-Saskatchewan people how small a community it really is.
Oh, yeah, totally. It's so you're just gonna have to take our word for that if you don't necessarily have experienced that yourself. But anybody from Saskatchewan, I guarantee you, they're nodding their head right now. Another question that came in: how do you estimate the NAV? Are these your personal valuations? Do you use a third party? How do you come to those numbers, Leif?
Well, the most complicated part of our NAV calculation, of course, comes at the audited year end. The audited year end numbers. So EY, Ernst & Young, does that for us. And what the terms we came to with them so that they could be comfortable signing off was, for instance, this past year end 2019, I'll back up. We get appraisals. We have to get appraisals done for every one of our purchases for the purpose of getting our mortgage. So so what we ended up coming to terms with EY is that the lands we bought in 2017, we had to get new appraisals for that package. Then we've got a third party, Hammond Realty, the largest farmland realtor in Saskatchewan. They give us an opinion of value, and EY compares the Hammond opinion of value to the new appraisals and to the appraisals that we, of course, have for 2018, 2019, make sure that that's all lining up as being in sync. and then they sign off on the overall valuation.
Right.
So we can have no older than 3-year appraisals is part of our deal with EY to keep that rolling forward. And then the quarterly updates is done by Hammond, and just because they have the finger on the pulse of what's happening. So it is third party. It's not my numbers.
That's great. Last question, and then we're going to, we'll see if we can get this thing done right on the hour. How much of the land deals provide the opportunity for improvement, such as the case study, versus how many deals are already fully developed land?
Let me put it in terms of this way. All our packages, we have the gross acres in our purchase and the cultivated acres. Our average cultivated acres on a purchase to date is around 90%. So 10% of the land we're buying is not at the time of purchase farmable. Some of that will never be farmable. There might be a creek running through it, a valley, something that makes it, or a large enough slough, it's never going to be drained. But there is going to be a component of all our purchases that is available for recapture.
Right. Okay, that's great. Leif, thanks for spending the time today. You did a great job as usual. And thanks to all you for tuning in. I know these are busy times for everybody, and I know that summer is you know, that time is even more valuable. We appreciate weather like this maybe more than others. So I'm really grateful that you all chose to spend an hour of your time with us. And like I said earlier, if you have any questions, please talk to whoever invited you to the call. And if you have any interest, you know, and you can get in before this next closing, that would be great. Thanks, everybody. Enjoy the rest of your day, and we'll see everybody soon. Thanks,
everybody.